When you own a commercial building, you acquire a commercial building, you get to depreciate it over 39 years. If it's a residential building, you depreciate it over 27 and a half years. And most people know that. But you can do what is called a cost segregation study. Now, these used to be super expensive, in the thousands and thousands of dollars. Well, now with technology, they're down in the maybe $1,000 or $2,000, depending on the value of the property. Very affordable. Mm-hmm. So you do a cost segregation study. And what cost segregation does is it segregates the property values where the depreciation schedules were less than 20 years. You can actually accelerate those. And with bonus depreciation, any property acquired since, say, October 1 of 2017 and January 1 of 2023 gets 100% bonus depreciation. So let me give you an example. Let's say you bought an apartment building for $1 million and $300,000 of it is land. There's $700,000 of it left. Maybe 25 or let's say 30% or so, $200,000 of it is less than 20-year depreciable property. They give you a tax deduction of that $200,000 now. Now, if you bought that property in 2018, 2019, you can do a look-back cost seg study and actually get that full deduction on your tax return, either by amending or there's a form you fill out, you can get it on this year's. If I understand that part of it. I don't do tax returns. I'm just, the 30,000-foot guy.
Correct.
But the other thing is there are still opportunities to do that right now, and I'll explain what real estate professionals are in a second because that's key to this. But the depreciation schedules are phasing out. So the 100% bonus depreciation stopped in 2023. In 2024, it's 80%, and then 60, then 40, then 20, and then it's gone.
Okay.
So right now, on that $200,000 write-off, if you bought the property this year, you get 80% of that or $160,000 deduction. If you or your spouse is a real estate professional, and I'll explain what that is in a sec, then you can take all of that this year. So if you're in a 30, 40% tax bracket, saves you $40,000, $50,000, $60,000 in taxes.
So let's look at a scenario. Somebody buys a townhouse, let's say, in 2023, like this year, and they buy it for let's just say $450,000. Mm-hmm. And so let's take me the rest, and it's going to be rental property. All right. So let's take me the rest of the way now. How can I qualify for this?
Okay. Let's say that the land cost X and the property structure was worth $275,000 left over. Okay. That's easy math. So $275,000 divided by 27 and a half years means you get a depreciation of $10,000 per year on that property. All right, that's straight line depreciation. That's what everybody gets.
Right.
Now, if you make more than $150,000, you can't even take that depreciation.
So that rules out a lot of people.
Because you phase out.
Okay.
Now, if you're a real estate professional, you can take that depreciation without regard for your income. But in addition to that, you can also get the bonus depreciation. So bonus depreciation would take all less than 20-year property. So of the $275,000, let's just say for the sake of discussion, $100,000 represented carpet and drapes and lighting and landscaping and so forth. That can all be bunched into this year, and you take a $100,000 income tax write-off as a real estate professional. What it takes to be a real estate professional, you don't have to be real estate licensed, but you do have to spend at least 750 hours and 50% of your work time doing real estate. It could be property management, could be fix and flip, it could be all kinds of different real estate. It doesn't have to be just sales. It's not going to work for you. But let's say your daughter decided she wanted to spend some time managing your townhome, managing you have other real estate too.
Correct.
So in your particular case, your daughter could set up her own property management company, and as long as she spends more than 50% of her work time, then she's a real estate professional.